Hi traders, welcome to this video, trading price action. We're going to be discussing the ascending and descending triangles, what they are, some live examples and how you can use them in your own trading. Before we do that, I'd love to know in the comment section what price action pattern do you want to see next. Is there something that you've been looking into and you want some live examples on? Let me know in the comment section and I'll get round to them. So what are the patterns? They're ascending and descending triangle patterns, and I use them most in trending conditions. I use them in uptrends and I use them in downtrends. Now in an upward trend we want to be looking for the ascending patterns. Why do we want to be looking for the ascending patterns? Well, what we basically see is an area of resistance form. Okay, we have two highs that form, or maybe even three or four highs that form a base, a sort of top in the market or a ceiling in the market. And what we typically see with an ascending triangle is that sellers initially come in and then price pulls back. So that looks like a typical pullback in the market. Then the market rallies and tries that resistance again, but fails to break above it. Okay, now this is where a lot of traders may consider this as a double top pattern and want to get short. Now what we would see then is a very critical part of the pattern. Okay, so what we have here is the resistance or the base of the pattern, right? Then you get a low form, and then the most important part is you get a higher low. Why is this so important? It's important because it tells me that sellers aren't aggressive enough to drive price back to the previous low. Okay, so that's why we only look at double tops when the low is broken, because it shows a change. A higher low in an upward trend is a continuation pattern, and what we typically look for then is price to break out of their resistance highs or the base, and then you look to enter on the breakout, stop loss below the higher low, and you look to target 1-2R trades. On a descending triangle, we look for bearish opportunities, right? And in this example, the market moves lower, it pulls back, it creates a high. Okay, the market then moves again, forms that base, right? Forms that base, or forms the support in this case. Now the difference here is you're looking for a lower high. Okay, the lower high, very important, because it tells us that buyers haven't been strong enough to drive it back to the previous high or even break out of that high. So what does that tell you? It tells you that buying momentum is fading. Okay, it is then confirmed with the breakout of that support, which again you can look for a breakout opportunity, stop loss above the lower high. Now just to give this a little bit more context, okay, what I like to look for, and if you are very familiar with my Blueberry Markets analysis with me, and you're very familiar with our live streams and things like that, you'll know that I always look to identify the why. Okay, why you should be in a particular market. And this is very, very important when you're looking at trading any Forex pattern. Any Forex trading pattern, doesn't matter what it is, this is very important. The why. Why are you in this market in particular? Okay, now a lot of things that I like to look at is strength and weakness. I like to look at a strong currency versus a weak currency, and then I like to look for breakout opportunities on those markets. So we've had some recent opportunities within the markets. There was one on Euro Kiwi where the market was showing us that there's a lot of New Zealand dollar weakness, okay, and a lot of euro strength. So you want to be buying Euro Kiwi. And then on another one we've got a CAD Swiss opportunity where we wanted to be buying the Canadian dollar and selling the Canadian dollar and buying the Swiss franc. So these are opportunities that were all created by strength and weakness. And why is that? Because it creates a condition of trend. Okay, and like I said, these patterns work really well in trending environments. So we need to identify trends within the markets, and we can do that by looking at strength and weakness. Okay, that's just one way of being able to do that. You can use fundamentals, macro analysis, things like that to also get to to why you want to trade. You know, we talk about commitment of trader reports, seasonal patterns, things like that. But the ultimate thing is the condition that we need is the trend. Okay, the condition is that we need the trend. Then the strategy is going to be using those triangle patterns. Identify if we do get those triangle patterns setting up on those charts that have formed that are trending, that have been formed from a type of analysis. Okay, so it's very important to understand that when talking about conditions within the market, talking about trading opportunities. Now, this was a live example that we looked at on Euro Kiwi. So this was Euro Kiwi. We wanted to be a buyer of Euro Kiwi recently because the New Zealand dollar was a weak currency and the euro was a strong currency. So we want to buy this market. Now, as you can see, we're in an upward trend. The market before this, if you go and look back at this area, this was a couple of weeks ago, the market has been very bullish. If you open up a Euro Kiwi chart right now at the time of this video, you'll see that this market is very, very bullish. Now, what we saw on this H1 time frame, okay, was an ascending triangle pattern. The market formed a base. It had resistance in here. Okay, now what do you notice about the lows in the market? They get higher, higher low, higher low. What happens? We break out. You could enter a long position on the breakout, stop loss below the higher low, and look to trade this market to the upside. Okay, now moving on to the descending triangle then. So this is CAD Swiss. Again, why were we interested in this market? Well, we had the Y, which was selling CAD, buying Swiss. We had the conditions of a downward trend forming, and look what happened. The market formed a base around this zone in here, right? We have support, support, support. What do you notice about the highs? They're getting lower. Okay, so you have a high and then you have a lower high. What happens then is we break the base of the pattern, the support of the pattern, and you could enter on the breakout close, stop loss above one of the highs there, and then look to trade the market to the downside. So it's a very, very simple strategy that you can apply to trending markets. Okay, but please remember why you want to be in a market first, then look for the conditions around it, then look for a strategy. Thanks for watching the video. I really hope you enjoyed it. If you did, leave it a thumbs up. Subscribe if you're new, and I'll speak to you in the next video.